Okay, so first of all, you have to find the high level or the low level in the chart. So in the current chart, you can see this is the high level, and I will mark a line on that level, and then we have to wait for the price to come back towards that level and touch it. So after that, you have to watch it very carefully, and you will see a sell candle. So this sell candle is basically engulf candle. Okay, you can see here right on the key level. So before going more into that, I will explain you about the engulf candle and candlestick patterns. Alright, so this is the bearish engulf pattern. Let me dig more into it. But before that, let's dig into the candlestick patterns. So basically, this is a bullish candle, and the opening price of this candle is the lower portion like this one. So candle start from here and candle is ending or closing at this level. The same like that, there is a high and the low price as well of that candle, which is the high and the low wick of that. So lower wick is known as low level or low price of the candle, and the upper wick known as the high price of this specific candle. Same like that, we have the body as well, which is more important than the other things. So this is the body, so we will call this green thing body of the candle. Okay, so same like the bullish candle, we have the bearish candle as well. But there is minor difference. You can see the open price and the close price of this candle is quite different, or you can say is reverse of the bullish candle. So it starts from the up and then close at the down. So engulfing candle consists on the two parts. One is bullish engulf and the one is bearish engulf. So here are the examples of the bearish and bullish engulf candles. Alright, we will dig more into it. But there are more things. Not all the engulfing patterns are valid, so we have to use only strong engulfing patterns for our strategy. And you know, this is the bearish engulf candle, and there are few rules I have created which you have to use specifically to trade with our strategy. Okay, so this rule is body of the bearish candle fully covers the body of the previous bullish candle. So it's mean the red body covers all the green body area like that. As you can see, the green body falls under the red candle. It's mean that the red candle body is covering all the size of the green candle body. So our rule number one is validated here. Second rule is that the wick of the red candle also covers the green candle completely, including the wicks. So here are the examples. So you can see the body is covering the green candle. You can see the rule number one is validated here. So same like that, we have the rule number two, where the wicks should also cover the body and the wicks of the green candle, and green candle is not going beyond the wicks of the red candle. So rule number two is validated here as well. No problem. I will give you some few more examples so that you can understand it much better. This is the another pattern. The body is covering, and you can see valid rule number one is validated here, and you can see the wicks are also covering. No, actually, because if you see more carefully, the wick of the green candle is beyond the high level of the red candle. So it's mean the wick is going outside the range, and red candle is not completely covering the green candle. So that's why our rule number two is not validated here. So we will not consider this pattern a valid pattern for our strategy. All right, there are few more examples. So this is another pattern. You can see the wicks is covering, the body is also covering, so it is a valid pattern. Third example, body is covering, wicks are also covering. Yes, it is a valid example. This in this example, the body is not covering by the red. So as you can see, the wicks are covering the green body, but the red body is not covering the green body. As you can see, the green body going beyond the lower limit of the red body. So it's mean it's not a valid pattern, and we will not use this pattern. By the way, this is a right engulf pattern, but not valid for our strategy. We will ignore these types of patterns while we will looking into the market for to find or generate the signals. All right, so I have explained or shown you a few examples. So two of them were valid and two of them were invalid. So you know now better that which pattern is good and which pattern is not valid for our strategy. All right. Okay, same thing goes for the bullish engulf candle as well. The rules are same, but you have to just look on the different colors. Like the green body should cover the red body in case of bullish engulf, and wicks should cover the red candle completely. So in that case, this is a bullish pattern. So rules are same, just the color is the difference and the perspective is different. But there are few exceptions, like in this case, if you see very carefully this case, the body is covering and the wick is also covering, so it is a valid pattern, but I'll not consider this for my strategy to generate the signal. If you see it carefully, you see the body is too much bigger than the green candle. So it is around 3x bigger than the green candle. So that's why I'll not consider this. I prefer to use only when the size of the red candle is 1.5x maximum or maximum 2x maybe, not more than that. In that case, it's quite a lot. This example is right and this example is also valid because the red body is not that too much big, or in that green case green body is not that big. So I will not consider this pattern as a valid engulf pattern for my strategy specifically. Okay, so second most important part of this strategy is the key levels. Now consider this pattern and consider this is how the market is moving currently, and the current price is 1.4 right now. Okay, so there are some high levels and the low levels. So I will consider these levels at the key level. So there are few other levels, as you can see these minor levels. So I will not consider them as a key level because these levels are too smart compared to the high and the low of the previous I have shown you. So these are not the valid patterns. But for this case, these patterns are valid because the wave is quite big enough. You might have a question, this level is also high level, so why you are not considering this as a key level? The reason is currently market is moving, this level is being generated, so that's why the wave is not that big enough, so that's why I will not consider it as a key level for now. Okay, so after finding out the key levels, you have to draw a line on them, the red for the above and green for the lower. So let's suppose the current market is trading here, okay, around the key level. You have to find very carefully which engulf or the which candlestick pattern is being generated here. If you see any engulf pattern here around the key levels, and both the rules are for the engulf pattern is validated, which I have defined before, then you can consider this as a valid signal. So when you can enter in this signal, basically you can enter a sell trade for this signal specifically because this is a sell engulf candle right after the closing of the red candle. So this is our entry point and the stop loss will be a little bit above the both candles, like green and the red candle high, a little bit high of the wicks. Alright, so for finding the target, it is bit tricky to find the target in this case. So basically you have to find the distance from the stop loss and from the position level. And then you have to use the target 2 times or 1.78 times of that distance. For example, this is the distance, so I will use the 2 time distance and will consider it as our target. And in other language or in other words, it is 1 to risk reward ratio as well. So this is my target. So now we will dive in the real life trading setups and we'll see how the system is reacting in real life chart. So this is the chart of gold and I'm going to look for the key levels. So as you know, the key levels are the highest level or the strongest level in the current looking chart. So this in this case, our key level is this, our key level is this as well, but there is another hidden key level as well, which is this one. The reason is price went down very sharply and then move upward because it's a sharp and there are a lot of big swings. That's why I'm considering it as a swing, as a key level. Now look for the price to touch these key levels or just come near them and create those engulf pattern which we have discussed. So now I'm just waiting and you can see here price touched this level and created an engulf pattern. And you can see the red candle body is covering the green candle body, which is okay. The rule number one is valid. Second rule is the wick of the red candle also covering the whole green candle. So this means that two of our rules are valid here. if the rules are validated here, so it's mean that our engulf pattern is validated. And because the engulf pattern is around the key levels, that's why we will go for a short position. I will enter the short position right after the closing of that thread. So this is my setup. So my stop loss will be a little bit above the previous or the engulf candle high, which is this, and my target will be, I will go for maximum, which is 2x. You know, this could be 2x or it could be 1.78. So the 2x will be like this. So my risk reward ratio is 2.01. And if I see, so trade almost closed with this candle, also with this candle as well, which is really nice. As you can see, the price simply touched this level, price simply touched this level, so it's mean our trade has been closed. And this strategy is really very strong, and this is the strategy of the smart money, how they enter in the market quickly and how quickly they close their position and get a lot of money from the market. So I'm gonna show you some more example like that on the Bitcoin chart as well. So let's move. Okay, so here is the Bitcoin chart, and I will find the key levels. So first of all, these are the two key levels. You can draw here as well. It doesn't matter if price is just coming closer to the key level, then we will consider it as a key level. And this is of course our key level. Okay, and I'm just heading towards the price and just looking if the price touched or okay. So you can see price simply touched here. Price created a sell candle which is breaking the key level. It is okay. It is very fine. We have to still look for the engulf candle around the area, and I found that engulf candle. As you can see, this is an engulf candle. The green body is covering the red body. Okay, the rule number one is valid. Rule number two is the wicks are also covering. Yes, it is. Then we will consider it as a valid engulf candle. So now I'll enter a long trade in this case, and I will enter a long trade right after the closing of the green candle, and my risk reward ratio will be like that. So I will just put a little bit or below the wick, and this is my stop loss, which is a lot quite big I think in this case because the candle is that big. But you remember, if the candle size is 3 times the previous candle, then we will not consider this trade as a trade. The reason is that in that case our stop loss will be very big. So that's why I made that rule not to trade on the engulf candle which have a big candle size like 3x. You can use maximum 1.5x, as you know. Anyhow, our target will be 2x or 1.78 as well. It is up to you. So target will be around here. Yeah. So, okay, the good thing is this trade is currently running, and this is how you can see how strong the system is. You have maybe if you are using 1.78 risk reward ratio, then your trade was already closed here, I think around here. But if you are just waiting for the 2x profit, then you have to, I think, wait a little bit. So let's see another example on the Bitcoin chart. So I will find the key level, which is this one, and also this one is a key level. You can consider it as well, that but just ignore it because it is very close to that level. So we can consider this as a area, and we can consider this green line as a area, and you can use that area to consider for a signal. And of course there is another key level here. I will just move and just look for the price, how it is reacting. Okay, what I have noticed here, I have noticed a engulf candle which is very close to this key level, as you can see here, and it is not that far. This is a very good example of that. If you can see here, the candle is very close to the upper key level and the lower key, and touching the lower key level as well. So it's mean that we can go for this signal. So the rule is the body is bigger than the previous the green candle, yes, and the wicks are also covering the previous candle. I will enter a sell trade. After that my target stop loss will be a little bit above the previous candle or these both candle high, and target will be 2. So in that case it will be like that. Okay, so it is just a one candle trade. If you have just entered a trade right after the red candle, then it is a just one candle trade. And it I'm using the 4 hour chart, so you have almost completed your trade within, you got the profit just within 4 hours. So this is, you can see how strong this system is. But if just for a motivation, I am just showing you how the price reacted. If you have seen, it is going down a big move after that signal, so it indicates a really strong strategy.